big opportunities in life have to be seized. We don't do very many things, but when we get the chance to do something that's right and big, we've got to do it. And even to do it in a small scale is just as big a mistake almost as not doing it at all. I mean,
what exactly are these valuable opportunities that Warren Buffett often talks about? Have you ever wondered what he means by the power of starting your journey with small steps? What if I told you that with the right strategies, you could build a life where your money works for you? A life where you may never have to struggle financially again. The truth is, there's a simple secret to achieving this goal, and Warren Buffett used this secret to become the 5th richest person in the world right now. Are you ready to discover the key to this success? If your answer is yes, keep watching because it all starts with dividends. Investing is a key that opens the doors to passive income for many people. First of all, you can start this journey with small amounts without the need for massive initial capital. Furthermore, with the right choices, this journey can bring you riches beyond your wildest dreams. Warren Buffett also owns many dividend-paying stocks managed under the Berkshire Hathaway umbrella. Let's see what he has to say on this topic.
Well, the answer is I do believe in dividends in a great many situations, including many of the ones companies in which we own stock.
Buffett talks about the power of dividends, and perhaps you should listen to this power as well. So, how will you take the first step on this journey? I assume many of you dream of an impressive income, like $40,000 annually or $3,300 a month. If you want to turn this dream into reality, the strategy I'm going to show you is perfect for you. First, you should know that income is of two types, active and passive. Active income is the money you earn through labor, by constantly putting in effort. Passive income, on the other hand, is the revenue model where, once set up, your money continues to work for you. The key is to know how to use your active income to expand your sources of passive income. Practically, this means investing a portion of your salary, as you might guess, in dividend-paying stocks. Pause for a moment. Some of you might be thinking about real estate investment. Yes, real estate can generate passive income and appreciate in value, but it generally requires substantial initial capital for a start. Whereas with dividend investments, you need as little as $100 or even less. But don't worry, I'll have some suggestions for those of you who like real estate investment in the later sections. Keep watching us.
But with public companies, a lot of people do buy stocks to obtain dividends, and they hope for regularity, and there's a signaling aspect to it and everything.
As Buffett emphasizes, if you want to secure a steady income, you should consider dividend stocks. Determine how much income you need to maintain your standard of living. For example, consider Coca-Cola, a company in which Buffett has a significant interest and holds a substantial stake. Coca-Cola is a giant that everyone knows is financially robust. When it comes to extra cash, the company either sets it aside, invests it for growth, or distributes this income back to shareholders as dividends. Coca-Cola having such an impressive financial structure makes it extremely logical to pay out to shareholders. Now, let's discover how another company that Buffett is involved with has adopted this approach. Take a look at what Buffett has said about this tactic concerning another company he owns.
See's Candy has paid everything virtually out to us that they've earned because they do not have the ability within Se's Candy to use large sums, which they earn, intelligently in their business.
Did you hear that right? Sometimes the most effective way for a company to use its profit is simply to pay it out to shareholders. Coca-Cola has a long history of dividend payments and currently offers an annual dividend yield of 3.04%. Dividends are generally paid quarterly, so you receive payments 4 times a year, which is a good thing. So how much can you expect to get from Coca-Cola? Let's say you own 1 share of the company in its current state. If you buy a share of Coca-Cola, you would receive $1.84 in payments per year. That's pretty bad. But what if you had 10 shares? Now that figure jumps to $18.40 per year. What about 1,000 shares? Now, you're looking at $1,840 a year, and you would need a total investment of $1.295 million to earn up to $3,300 a month. This probably makes you want to give up, but don't. In the later parts of this video, I will show you how to really speed up the process of getting to that number in a very easy way. The best part is, owning a share has some great benefits. First of all, a company doesn't stand still, and as a good company like Coca-Cola grows, its value constantly increases. Thus, the money you invested and the dividends grow along with it. For example, the dividend payment per share for Coca-Cola was only 28 cents in 2013. Now it is 46 cents. That's almost double. I won't even mention the fact that the share price has increased by 60% since 2013 to alleviate your concerns. Listen to these words from Warren Buffett about investing. If you want the recipe for getting rich in the stock market, find stocks that appreciate above average, have potential, save and have growing dividends, and buy them at attractive prices. It's that simple. Now, you might wonder if there are other options to speed up the process. Let's take a look at some of the stocks Warren Buffett currently owns and their dividend yields. I had mentioned Coca-Cola earlier. Now let's look at the others. Citigroup currently has a dividend yield of 4.5%. That means you would need roughly $875,000 to earn $40,000 a year or $3,300 a month. Another company is VDS Energy with a dividend yield of 8.68%. Meaning you would need $450,000 to earn $40,000 a year. You're probably thinking that the best way to do this is to find the stocks that pay the highest dividends. You're right, but that's not necessarily a good choice. If you want to get the highest value for your dollar, it needs to be done.
The test about whether to pay dividends is whether you can continue to create more than $1 of value for every dollar you retain.
Although high yields may seem attractive at first glance, we often overlook the fact that these yields may not be sustainable. Let's say you invested in a stock of a company offering a generous dividend yield of 10%. At first, you're pleased with these large payments. However, after some time, you could see the company go under due to poor financial strategies. Although it's not directly your fault, you ultimately lose your entire investment. High dividends may be appealing, but they often carry an element of risk. Keep this quote from Warren Buffett in mind. Time is the friend of the wonderful company, the enemy of the mediocre. What if the idea of investing in individual stocks scares you? Don't worry, there's another option that offers a broader perspective. ETFs. These are investment vehicles that bundle many different stocks together into one package. Although there are many different types of ETFs, let's focus on the two most notable ones for now. Firstly, I want to mention VYMI, an ETF popular at the time of this video's filming, which offers a high dividend yield of 4.53%. Simply put, you would need to invest about $875,000 to earn an income of $40,000 per year. The second option is FDVV, another ETF that offers a dividend yield of 3.8%. This would require an investment of $1,035,000 to earn $40,000 per year. While investing in ETFs generally requires less research, it's a good idea to do a brief online review to see which companies you're exposed to. For those interested in real estate, another alternative is investing in real estate investment trusts, or REITs. REITs operate similarly to stocks, but invest in real estate. Additionally, these types of companies are legally required to distribute 90% of their earnings to shareholders, which usually means attractive dividend yields. For example, a REIT with a dividend yield of 7.44% called XL REIT would require an investment of $520,000 to earn $40,000 a year. Another noteworthy option is the Ishers Cohen & Steers REIT ETF, which offers a dividend yield of 5.86%. You would need to invest about $665,000 to earn roughly $3,300 a month from this. Now, you must be wondering how to get to these large sums, right? This is entirely possible. For instance, I previously mentioned that Coca-Cola offers a 3.04% dividend yield, and you'd need nearly $1.3 million to earn $40,000 a year in income from it. Dividend investing doesn't mean you have to start with a large lump sum. In fact, big investors also do not prefer this strategy. Follow Warren Buffett's approach. He adopted a slow and steady path, and so should you. Dividend investing is a marathon achieved through patience and consistency. Specifically, you can start by regularly buying a particular stock, say Coca-Cola. Let's assume you start with 10 shares and add 10 more shares each month for 10 years. In that case, you'd earn approximately $3,009 in annual dividend income. If you choose to buy 20 shares each month, you could raise this amount to approximately $5,975. However, there's another key point to consider in this strategy: the power of compound interest. That is, if you use your dividends to buy more shares instead of taking them as cash, it contributes to the rapid growth of your money. This is commonly called drip dividend reinvestment plan. What does this approach yield you? If you buy 20 Coca-Cola shares a month for 10 years and reinvest the dividends, you'll earn an additional $1,000 a month without doing anything, just by reinvesting your dividends back into the stock. And remember, the value of your assets keeps growing, so you have a massive accumulation that could be worth close to $500,000. A brief note: dividends are considered income, so they are subject to taxation. If you reinvest your dividends, this shouldn't discourage you. However, when tax season comes, you should know the steps to sustain yourself through your dividends. First, decide what you will invest in, whether it's stocks, ETFs, or REITs. Second, whenever you receive a payment, you need to automatically invest it back into your stocks. Third, make sure you always reinvest your dividend money. This way, you can earn more by having the money you made from your money work for you. Point number 4. Finally, don't forget that you need to pay taxes on the dividends you receive. It may start slow and feel like a long process, but before you know it, you'll earn tons of money through dividends and live the life you've always dreamed of.